Taxes. Yeah, 1099 contractors, owner-operators, you gotta file your own taxes. Have you at least done your bookkeeping? Do you have QuickBooks? Let's show this guy how to file his taxes for his box truck business. Hold on a second. Luckily, you guys have me. Did all of it for you.
Don't wanna sleep in, cause I got something to prove. I gotta take what I hate.
So who cares about taxes? Bookkeeping is boring, doing my taxes is stressful, the government just takes all of my money. These are things I hear all the time, and I understand. I do taxes, I do bookkeeping, but as an owner-operator, it is incredibly important for you to stay on top of your taxes. And a large group of drivers who are often forgotten about when it comes to taxes are 1099 contractors. Did you know if you're a 1099 contractor, this video is just as much for you as it is for my owner operators. It's really important that you keep track of your expenses, because if you are an independent contractor getting a 1099, you can actually file a Schedule C. So you can take advantage of a lot of the same deductions and expenses of your typical owner operator. So in this video, I'm going to show you guys step by step how to file your taxes. Give them 1099s. I could shout this from my rooftop. It's often overlooked because it's one of the first things you need to do during tax season. The deadline to file your 1099s is January 31st. If you're watching this video as soon as I posted it, you're in luck. I'm posting this video in January. The deadline to send your 1099s to the IRS and to your vendors and contractors is January 31st. So who do you need to send a 1099 to? That's a great question. I'm happy you asked. Anybody you paid more than $600 in 2021. Business is a corporation, you do not need to give them a 1099. Good examples of people you might need to give a 1099 to: your dispatcher, definitely. Your mechanic, if it's not like a big business. And if you have drivers who are not W-2 employees, they definitely need to get a 1099. Other people, maybe your bookkeeper, your accountant, maybe your social media manager. And then also, even if your attorney is a corporation, they still get a 1099, no matter what. So for any legal fees. One last thing I want to add about giving your vendors and contractors 1099s, it's super important. Before you pay anybody, you need to get what's called a W-9 from your vendors and contractors. The W-9 has all the information you need to fill out your 1099. Okay, so your individual income tax return is called a 1040, and to that you will attach a Schedule C. This is an attachment to your individual income tax return if you are a single member LLC or a sole proprietorship or a 1099 contractor. If you are a corporation or a partnership, you'll get a K1. That's completely different. But for most of you, you're going to be a single member LLC. You're going to attach a Schedule C to your 1040, your individual income tax return. On that Schedule C, it's just a profit and loss statement. It's the IRS fancy version of your income statement, your profit and loss statement. Have you ever heard me talk about QuickBooks? Well, if you haven't, I'm going to say it again. QuickBooks is incredible software for tracking your business transactions and generating your financial statements. Two very important financial statements: your balance sheet, which has your assets, your liabilities, and your equity, and your profit and loss statement has your revenue, your expenses, and your net income. On your profit and loss statement, under your expenses, you're going to have individual categories like bank fees, cost of labor, supplies. All of those individual categories will go on to your Schedule C, line by line. This is why it's so important to have accurate, up-to-date bookkeeping, because you want to have all of these categories be reasonable, make sense. You don't want any red flags whenever your tax return is submitted and the IRS reviews it. If you have crazy high numbers in advertising and marketing, if you have way too many business meals, if you have really high cost of labor and no 1099s, all of these individual categories on your Schedule C and your profit and loss statement will be analyzed by the IRS. And if you have anything that's way too high or way too low for the industry that you're in, it's going to be a red flag and it's going to cause an audit. We're not afraid of an audit, but we do everything we can to prevent an audit. Last thing I want to say about your profit and loss statement and your Schedule C is your net income. So you take all of your revenue, all of the money you received from brokers, from Amazon Relay, from shippers that you work directly with, all of that revenue is counted as income, and then you take all of your expenses, subtract that from your income, and then you get your net income. Keep in mind, I see this all the time. So if you are the owner of your single member LLC, if you are the owner, whatever you pay yourself does not come out of your profit and loss statement. I had to touch on it because I see it often. Truck owners, owner-operators think that the money they're paying themselves is a business expense, is a deduction. It's not. If you're a single member LLC, I feel like I've said single member LLC like 30 times. I need to come up with a new way of describing single member LLC. But if you're an S corporation, that's one of the benefits of being an S corporation. If you're a corporation, then the salary you pay yourself as the owner is an expense, is a deduction. You're gonna get a W-2. All right, Q&A time, questions and answers. If you follow along on my YouTube channel, I frequently post a status during the week, every week, and I ask questions like, hey, I'm making a video on how to do your taxes. What do you guys wanna know? So I'm gonna answer your questions right now. All right, Nella7, you asked how to file if you had a 9-to-5 with W-2s for half of the year and ran under your own authority the second half. Nella7, that's a great question. If you had W-2 income, you put it on your 1040 like you always do whenever you file your taxes. So the thing about an LLC is it's a pass-through entity, which means there's no difference between you and your business. So whenever you file your taxes, you're still filing your individual income tax return, which is a 1040. And then you simply attach your Schedule C as an attachment to your individual income tax return, your 1040. Ebony Jackson, you asked, what documents do I need? And 1099 paperwork, does the owner need to file as well? What documents do you need? I'm going to cover that soon. I'm going to go over all the miscellaneous documents. So I already talked about your Schedule C, but I'm going to talk about things like 1099s, 1098s, child tax care credits, all those miscellaneous documents that you might need. 1099 paperwork. Yes. If you've made it this far, you've already seen me talk about 1099s. Travis Stuckey, you asked, what are some things you could have done differently during the year that would have helped you when you filed your taxes? Keep accurate records and do weekly and monthly bookkeeping. The biggest piece of advice I have for every business owner is to do it a little bit incrementally throughout the year as you go. Also, keep accurate records like receipts, and avoid mysterious transactions like $400 at the ATM or $1,000 Venmo transfers. So keep the transactions clean. Separate your business checking account from your personal checking account. Avoid cash transactions. Keep all your receipts and do your bookkeeping on a monthly basis throughout the year. Don't wait until the end of the year. All right, that's it for the Q&A. If you guys have more specific questions, I'm gonna do this more often in my future videos. So let me know what your questions are in the comments below. You might be stressed, you might be confused, and that's totally okay. This is not easy stuff, but it's okay to ask for help. You can file your taxes 3 ways. You can do it yourself. You can go to those pop-up stores like H&R Block, or you can hire a CPA. First, if you do it yourself, I recommend going to freetaxusa.com. That's how I file my taxes. It's completely free. You can do everything on their website. I actually made a tutorial, and I'll link it below in the description, how to file your taxes with freetaxusa.com. I walk you through step by step. Check it out. Second way to do it is through H&R Block. You might spend $100, you might spend $200. Third way to file your taxes is through a CPA. You're going to pay a premium, but if your CPA is good, then he or she will help you save money and help you set up your business for success in the long run. So if you really want to do your taxes right, and if you really want to maximize your tax deductions and take advantage of some really advanced tax strategy, I recommend reaching out to a CPA. Just know you'll probably be paying $400, $500, $600 for tax preparation fees. Also keep in mind that whoever files your taxes will not include all of your bookkeeping in this one-time tax preparation fee. It's your responsibility to bring your tax preparer a profit and loss statement if you want to file your taxes for $300 or $400. But if you plan on just bringing 12 months worth of bank statements, be prepared to spend a couple $1,000s for not only tax preparation, but also 12 months of bookkeeping. Okay, this part is really important, so lean in and pay attention because it can get complicated. Whenever you buy your truck, let's say you spent $50,000 on your truck. You bought it last year. That $50,000 is not a business expense. I'm gonna say it again. That $50,000 is not a business expense. It doesn't matter if you bought the truck with cash. It doesn't matter if you bought the truck with a loan. It doesn't matter how you acquire the asset. That truck is going to last you 5 years. So you need to expense that truck over the useful life, which is 5 years according to the IRS. So in order to capture that expense, we need to do what's called depreciation. Take the total value of the truck. Let's just say $60,000 was the purchase price of the truck, and the truck's gonna last you 5 years according to the IRS. So you divide 60,000 divided by 5 years, divided by 12 months, and that is your monthly depreciation expense. In this situation, $1,000. Whatever the purchase price of the truck is, divide that by 60, that is your monthly depreciation expense. Now, if you have a loan for the truck, let's say you're spending $1,200 a month on your truck loan. Now, this is important. Whenever you pay back your loan, that entire payback is not an expense. You need to split the principal and the interest. Ask your bank, ask your loan officer for monthly loan statements and check. There's going to be probably $900 allocated towards the principal and then $300 allocated towards interest. The amount you pay towards principal is not a business expense, but the interest paid is an expense. Interest paid plus depreciation is how you capture the expense for your truck. This topic is slightly unrelated, but it's still important and I want to touch on it really quick. A lot of people want to pay as little in taxes as possible, which is cool. I totally understand it. However, keep in mind, if you want to apply for a loan in the future, whether it be a business loan or a personal loan, you need to show income. No bank is going to lend you money if you had a negative $10,000 net loss in 2021. So keep that in mind whenever you file your taxes. It's okay to show a little bit of income, pay a little bit of taxes so that you can get that loan next year. Personal loans, maybe you want to buy a house, you need to get a mortgage. Business loans, maybe you want to buy another truck. You need to show banks that your business is successful and profitable in order to secure a loan. Here are 3 kind of miscellaneous general tips, not only for box truck business owners, but also for any business owner in general. I made a pretty cool video a couple weeks ago. It's called Best Tax Tips. The link is in the description below. I recommend you check it out. I'm not gonna touch on every expense and deduction you can have as a box truck business owner, but I want to touch on 3 things: your home office, your meals, and your personal car miles. First of all, your home office. You have 2 ways of deducting your home office expense. You can either the simple deduction of $5 per square foot of your home office not to exceed $1,500, or you can do a method where you take the percentage of the square foot of your whole house. So if your office is 500 square feet and your whole house is 2,000 square feet, you would then take 25% of all of your utilities, 25% of your rent, 25% of depreciation on your house. You would basically just take the fraction of all of your home expenses and count that towards your home office expense. Second, your meals, specifically travel meals, especially as a truck driver. So I talk about it in the video below. All of the meals that you eat while you're traveling are a business expense as long as you're traveling away from your home city. You can do 2 things. You can keep actual receipts and expense the meals that you actually buy from restaurants, or you can take the per diem, which is like $50 or $60 per day. Third, the last thing, now whenever I say mileage, I'm not talking about mileage for your truck. You cannot take the standard mileage deduction on a commercial box truck or a tractor trailer, but you can take the standard mileage deduction for your personal car. So if you're driving from your home office and driving to the mechanic, anywhere you drive your personal car for your business, keep track of those miles, and then you can take the standard mileage deduction. It changes every year, but it's like 56 cents per mile. Or you can take the actual expense the same way you do your home office. You can take a percentage of your vehicle, and then you can do actual expenses like repairs and maintenance and depreciation on your vehicle, oil changes, tires, gas. I wouldn't do that. Just take the standard mileage deduction. It's so much less complicated, and oftentimes you can actually get more of an expense, more of a deduction if you take the standard mileage deduction. So is that it? Is that all I need to know? Just a Schedule C and a couple expenses? No. Unfortunately, there is so much more that goes into filing your taxes, but it's really important that you do your bookkeeping. It's really important that you have an accurate profit and loss statement, and it's really important that you understand the 1040 and the Schedule C, because that is the meat and potatoes of your business tax return. But I'm going to put up on the screen here, there are a couple other miscellaneous documents that you might need, and I'll touch on them really quick right here. So we have your W-2 if you were an employee for anybody last year, a 1099 INT if you received interest from your bank, a 1099-G if you received any unemployment compensation last year, child tax credits and child care credit. Those are two different things. If you paid someone to professionally watch your children while you were at work, you can expense that. Just make sure you get proper documentation from your daycare. And child tax credits, you can get certain amount of money depending on how many children you have, depending on their age, depending on your filing status. Any medical expenses you might have had, that will not show up on your Schedule C medical expenses, but you can expense those. And then keep in mind there's also the standard deduction. Standard deduction varies depending on your filing status. It goes anywhere from $10,000 up to $20,000 for the standard deduction. And then 1098 mortgage interest, so if you own your house, the interest you pay on your personal house is deductible, and your 1098E for student loan interest. Similar to your mortgage interest, if you're paying student loans, you can also expense your 1098E student loan interest. Last thing I'll say, this is not an all-inclusive list. There are probably hundreds of different documents, hundreds of different tax codes that might be relevant to your specific situation. This is just a general, brief overview of some documents that might be applicable to you and your situation. So I definitely recommend consulting with your CPA on your individual tax situations. Quarterly taxes are very important because the IRS loves to get paid, and if they don't get paid on time, they will assess penalties and fees. So quarterly taxes, you need to pay your taxes just like withholdings come out of your normal W-2 income. You need to pay your taxes throughout the year on a regular basis. You need to do it at least quarterly. If it's your first year in business, you want to pay as much quarterly taxes as you did last year whenever you were an employee. But if it's your second, third, fourth year in business, your quarterly taxes are primarily based on your previous year's tax return. Whenever you file your taxes this year, ask your tax preparer to give you quarterly estimates and instructions on how to file those quarterly taxes. You need to file taxes every 3 months. You can file more often if you want. You can file as often as you want. And I recommend at least every 3 months, if not every single month, file your taxes. That way you're not hit with a massive tax bill at the end of the year. In conclusion, my best advice, just keep accurate records throughout the year. Don't wait until tax time to file your taxes, and don't be afraid to ask for help.
Do what you think is right, and see life do what you